Tesla stock has collapsed over the past year, down almost 60% year to date, but over the past couple of days, it's collapsed even worse, dropping another 12, 13, 14%. Right now, it's up 6% as of recording this, and Tesla's recovering just a little bit, a smidge, in the $1.2 trillion company becoming a $350 billion company. However, Elon Musk thinks it's all a bunch of nonsense. He says, honestly, the stock market's just crazy, and that employees of Tesla should not be worrying about the stock. Let's take a listen to what he said, and let's go into some deep dive and some basic analysis on what Tesla needs to do to become a $600 stock, which is a 6x from here by 2030.
Elon Musk sending an email to Tesla employees yesterday saying, quote, "Don't be too bothered by stock market craziness." And guys, we know it has been stock market craziness for this name. It's shed almost a third of its value, at least before yesterday and that rally we saw just in a week, given the fact that you have not only all the technical stuff that's going on within the broader market and where this name is concerned and issues around valuation, but also some of the fundamental focus too, with things like production and waning demand and higher interest rates in focus.
Easy for Musk to say, right? Don't be bothered by the stock market craziness, though. He obviously has seen better days in terms of how his own holdings have fared. Certainly sold a lot. Adam Jonas today, probably the best known named analyst who follows this stock, defending it somewhat today, even though he cuts the price target, Mike, down to, what, 250 from 330. He still says this D-rating has created an opportunity, so he's still defending it.
Absolutely defending it, saying that it's a broader EV issue. For the first time he's expecting since the COVID crisis next year, supply is going to exceed demand for EVs globally. That's a tough situation for any company with this kind of valuation, although he says that Tesla's advantages, inherent technological advantages and all the rest, are going to have it consolidate its market share and its leadership. Now, what's interesting to me about that call, well, first of all, about what Musk said, it's just your typical CEO speak, right? Telling employees just focus on what you can control, do what's right for the business, and the stock price will take care of itself. But it comes 2 months after Musk said he expects Tesla at some point to exceed the valuation of Apple and Aramco combined, which means $4 trillion. You're under $400 billion right now. 350-ish or so. Tesla is now less than 1% of the S&P. It's fallen toward the 20th spot. So in other words, it's the correct message, but the craziness also happened on the upside. And we should remember, Musk also over the years has said he's going to essentially go after the shorts and they're going to have a problem. But he's also at times said the stock price is too high. So what are we listening to? What's the message?
It's interesting.
It's a reaction to the last quote. That's all it is.
It's interesting that you talk about the message, but what about the messenger? And yes, it's typical CEO speak, and you've heard a lot of other CEOs say the same thing when their stocks have fallen. But some would argue that the messenger is as responsible for a big portion of the stock drop as anybody is. So I wonder what the employees who are not supposed to be bothered by the stock market craziness actually think.
Well, the flip side of that is you could say the messenger has been responsible for the gangbusters gains we saw through the pandemic, for example, and even before that, even before Tesla, which now, mind you, is sitting on something like $20 billion cash pile.
So that's all we're going to get from there. And that's kind of the couple key points I wanted to get across there. Elon Musk says, look, don't be worried about the stock market. Don't be worried about the stock price because Tesla's going to be okay in the long term. Stock market is just crazy. And, he obviously believes that the Fed is in an insane level right now, raising interest rates. Now, if you're an employee at Tesla, you may be like, well, yeah, you're the reason why the stock is down so much because you bought this Twitter thing and you're being all political. Elon fundamentally disagrees. He's like, it's not because of Twitter. Like, Twitter is irrelevant. It's because of the Fed and interest rates. And as the counterpoint says, there would be no Tesla, there would be no gains, there would be no potential to 10 extra money if there wasn't an Elon Musk in the first place. So you take it with the good and the bad. Now, what I wanted to analyze here is the base case. I spent a long time last night, about an hour, talking to one of my friends who's an investment banker, and he's very bullish on Tesla, but he's bullish from a pure quantitative perspective. I mean, qualitative analysis enters into his brain, but it doesn't really affect his analysis because, again, he's an investment banker, so all he thinks about is the numbers. And we were talking from 1 a.m. to 2 a.m. last night. Like, we were just up all night talking. And his base case is Tesla sells 10 million cars in 2030. Okay, let's give them 10 million cars. Let's give them an average price of $45,000 each. Give that a 25% margin. Take away 20% for taxes, divided by 3.4 billion shares. You get $20 earnings per share. Put a 30 times forward PE on that. You're at a $600 stock. And so at that point, that's a 6x from here, which 6x in 8 years is very good. It's not bad. Now, the problem is that it's a $600 stock that's about I think $1.8 to $1.7 trillion company, something like that. And that's not what people are investing in Tesla for. People are investing in Tesla for a $4 to $5 trillion company, something that fundamentally changes in the world. And they shouldn't be called naive for investing in that thesis, because the CEO, if you believe that you can invest based on what the CEO says, that they will be more profitable, more valuable, more important than Saudi Aramco and Apple, the two biggest companies in the world combined. So when you put that into perspective, you're like, okay, so all they have to do is do this basic thing, which we'll talk about how hard the basic thing is to do, and you get a 6x. If you give them any more value, like robo-taxis, I put a tweet up last night saying, is robo-taxis nonsense? And a lot of people are like, yeah, and a lot of people are like, actually, no, it's really possible. They have full FSD, which is, I think, the top of the funnel way, the internal link to get to robo-taxis. After that, they get the Optimus bot. They get Tesla Energy. That's actually, it was slightly profitable last quarter, growing 80% quarter over quarter. Like, if any of that becomes a big deal, you've got Tesla becoming one of the most profitable and one of the most insanely valuable companies on the planet. And that's only if that's everything outside of the base case of selling 10 million cars, which means if you're guaranteed the 6x at 600, what is the potential from there if you get all those other factors that I just talked about and pile it onto Tesla as like the icing on top? The problem is the 10 million cars. So I pressed them on this a little bit, and, we sell about 75 million cars worldwide. Let's say we get to 100 million by 2030. Having, 10% of the entire world's cars, or 20%, whatever it may be, 15%, is going to be hard for two reasons: competition, and will it eat at your margins? Now, the question here with competition is, okay, if competition is coming, is that competition, in the context of Tesla, going to be able to do a couple things? A, are they going to be able to create a superior EV car? Because if EVs are the future, then the competition is not automobile manufacturers versus Tesla, it's EV manufacturers versus Tesla. There aren't that many good EV manufacturers. There are some that are there, right? You got BYD, you got Polestar, but there's not that many that are great. Toyota, Honda, BMW, Mercedes, those are the traditional auto companies that are going to have to become exceptional at EVs in order to compete. Are they going to be able to become exceptional? And are they going to be able to ramp up the supply chains like Tesla has done through their vertical integration and the probably 5 or 6 extra gigafactories they're going to have in the next 10 years? To be able to actually produce that much to satisfy demand? And is the car going to be better than a Tesla car in 2030? I think that right there is the fundamental question. Is the car going to be better? Is the car going to be more profitable from a margins perspective? Is the tech inside of the car going to be better? Is the FSD going to be somewhat there that tells someone that they want to choose this over a Tesla? Is there going to be some level of autonomy to it? And are they going to be able to scale production? If those things aren't able to happen, which I believe if you're a Tesla bull, you kind of have to believe those things are not going to be able to happen, then 10 million cars in 2030 is not the craziest thing to assume. It's going to be hard. It's not going to be easy, but if you give them that base case of 10 million, the bear case is 5 million cars, 50,000 a car. You do the same numbers that I did above, you get about $340 stock price, which is a 2x from here, which is not horrible, but you're not investing in Tesla for a 2x. I mean, now granted, Tesla's already done amazing since IPO, but you're not investing still for a 2x. You're investing for this company as the best stock, individual stock in the market to invest in over the next decade. And I think that's where investors are struggling right now as with this existential question. Like, is it a car company? Is it a tech company? If it's a tech company, it's undervalued and I'm expecting massive returns. If it's a car company, it's still overvalued. And, is this Elon Twitter thing going to even pull it down even more? What is actually going to happen? And so when Elon Musk tells people in Tesla to not worry about the stock price, I think he's valuing it in the base case I mentioned, plus the 17 other different things that could be piled on top of that, giving Tesla the leverage, which now, sitting on 20 billion in cash, to do a lot more things like share buybacks and acquisitions and all these other factors that could make them into the most profitable and most valuable company in the world. So those are my thoughts. Let me know what you guys think. This Elon Tesla saga continues and see what happens. Stock is up right now. Let's see what 2023 has in store for us. And do you think that it's okay for Elon Musk to tell employees to not worry about the stock price and have a long-term vision? Because if I was an employee, I would be like, all right, bro, I'm trusting you for the long term. Let's see how this works out. Thanks guys so much for listening and watching. Leave your comments below. I'll see you in the next one.